Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So, it's officially a little bit of time after Liberation Day. And, well, as you guys can see from my screen, yes, we are in a sea of red. This is the top 100. If we even look across the board in terms of these pages here, this is the top 101 through 200. 200 to 300, 300 to 400, all the way down the list, it's red across the board. It doesn't even matter if it's a meme coin or not. This market is getting wiped out. You could also see the exchanges. The exchanges are down in a big way as well. And that is because of the peak volatility today. This is exactly what I was warning you all about because we knew that it was going to be a very volatile day. I think that the remainder of this week actually is going to be pretty volatile. Now, if we actually look at the live view of the crypto market itself, we could see that the total crypto market cap itself is down to about 2.64 trillion. And if we actually look, we could see that deep spike down. We went from roughly 2.78 trillion at about 4 p.m. Earlier today, all the way down to about 7. This was at 7 p.m. all the way down to about $2.64 trillion. So a complete loss, roughly, of over $100 billion. That's insane if you think about it. But again, the number one thing that I really want you guys to understand here is that this is why during weeks like this, when we have these big events happening, this is typically the best time to just kind of step away a little bit. Step away, come back when the dust settles. That way, if things are looking pretty good, things are looking stable, boring, that's the best time to be buying the price action. Just for an example, if we actually look at the 1 year, this entire time here back in the summer of 2024 leading into like the fall timeframe, this was all boring price action. Not a lot of major wicks or anything like that. This was the perfect time to be accumulating altcoins. Now, with the way that the market is currently, we are seeing peak volatility. We're seeing outflows of the ETFs. The sentiment right now is absolutely dead with, 29 fearful levels. And Bitcoin, you could see the big spikes on Bitcoin. The issue with these big spikes, though, because we went from roughly $81,000 all the way up to almost $89,000 or $88,000. The problem with these wicks, and you can see the candle wicks here, is actually over 88.6K, 88.5K. The problem with these wicks is with how high Bitcoin dominance is, because this has been grinding to the upside. This is actually hurting altcoins significantly more than it is hurting Bitcoin. So for every percentage that Bitcoin goes down, you can multiply that for altcoins. For an example, on the last 7 days, Bitcoin is down about 4.64%. The last 7 days, XRP is down about 13.34%. This is why Bitcoin dominance must be focused on during this time where Bitcoin is starting to have these deep sell-offs. But this is still, in my opinion, one big shakeout event because, listen, we haven't had Bitcoin dominance sell off. We haven't had Bitcoin dominance crash, like cycle over cycle in the past. This is what alt season looks like. This is what a Bitcoin season looks like. We have yet to actually crash from the top, leading to alt season. And everyone is now giving up on the idea of alt season. In fact, you can't even mention it without people saying, are you crazy? There's not going to be an alt season. And that's exactly what we want to see. But the main reason for the sell-off today, the main reason why, I said that today was going to be extremely volatile is because of the tariff discussions. Here we have a breakdown from the Coinbase letter on their thoughts regarding the outcome of Liberation Day in the US. Just above all hopes of tariffs being less widespread than expected have been crushed today with new tariffs on 185 countries. The Trump administration has been articulating exactly what they were going to do for months, Now the stock market is finally starting to believe what they are saying. On March 6th, President Trump said that he was not watching the stock market, but markets looked past it. The narrative quickly became short-term pain for a long-term gain. Today, President Trump doubled down on that view, raising tariffs on China to a whopping 54%. Minutes later, Treasury Secretary DCENT said the stock market sell-off is a Meg 7 problem, not a mega problem. With the NASDAQ 100 now set to open more than 900 points lower, the question is, what's next? In terms of extreme volatility, we look to trade swings in sentiment. Short-term price action will not be based on fundamentals, it will be based on shifts in sentiment. For now, tariffs are set to go live on April 5th and 9th without a clear end in sight to the trade war. Sentiment will become more polarized and positioning will follow. Avoid catching a falling knife, don't fear the volatility, capitalize on it. And yes, this is something that I cannot stress enough. I'm not going to sit here and say, hey everyone, you should be buying the dip, like everyone has been saying since going all the way back to January. And if you were buying the dip that entire time, we were continuing to dip and dip and dip. And now we're still ranging on $2 as support. If XRP loses that $2 support, we are going to be targeting about $1.60 to $1.80. I try to wait for the dust to settle. I try to wait for the trend to form yet again before even starting to look to buy. I have, stated many times over in the past couple weeks that I do have stablecoins parked on the sidelines for any major buy opportunity that we do get. I do believe that the next roughly week and a half, so the remainder of this week into next week, we will probably see more volatility. And it's not just because of the tariff discussions, but it's also because of the financial events that we do have upcoming. For an example, today, tomorrow, the 3rd, right? We know that we have the initial jobless claims, the U.S. trade deficit, the S&P final U.S. services PMI, the ISM services. Then we also have some Fed, individuals speaking. We have Fed Vice Chairman Philip Jefferson speaking, and then also Fed Governor Elisa Cook speaks. But then on Friday is the big one, right? We have the U.S. employment report, the unemployment report, and also, unemployment rate, the hourly wages year over year, and then we have Jerome Powell speaking. Of course, Michael Barr is speaking as well, and Christopher Waller, but the main one is Jerome Powell, because what Jerome Powell is going to tell us will severely affect the market in a big way. So we are looking at Friday into the weekend. Again, I don't like weekend price action. I've always said it. I don't trust it. It's the weekend is for price manipulation, basically. Crypto's not tied back to anything. The, traditional stock market is closed off. So, manipulation is going to be widespread during the weekend. So I'm more so looking at next week. I'm looking at next week because we also have a ton of updates happening. We have, consumer credit. There's a few other like small, initial things within there. But then we also have the initial jobless claims, consumer price index, the CPI year over year, core CPI year over year as well. And then also, a few speakers from the Fed, and then monthly US federal budget. And then Friday, producer price index, core PPI year over year, core PPI year over year as well, consumer sentiment, and again, another Fed speaker. So when we think about what's going to be happening here, we are going to see some pretty significant updates over the next week and a half. Now, should we, wait completely until we buy any dip or anything like that? The main thing here is we want to see support hold. And again, the stock market is a crucial factor here, because if we are now hearing about how the Meg 7, specifically the stock market has a Meg 7 problem, that sounds like an excuse. The market is getting killed because of the tariff discussions. That's just facts. We know that this is happening, okay? Now, am I against tariffs? No, I'm not. I just think that it is, short-term pain in a big way, and we don't know how long it's going to last. But the thing that we're really kind of looking at is the numbers here, because we have over here the full breakdown of the numbers. We have the U.S. implements new tariff policy targeting global trade. This is the new policy. So this is the overall numbers in terms of the percentage that we are now putting on tariffs, which is significant for a lot of these countries. But also over here, we do have the full list of the countries, the tariffs charged to us, and then also our reciprocal tariffs that we are going to be charging them. Now, one thing that I am noticing here across the board is it's mostly about 50% of what they are charging us that we're charging them. Like, for an example, China, 67%, 34%. But the thing is that we don't even know how accurate these numbers are. We don't really know the facts here. But this is causing the trade war to be really, it's growing significantly. Since going back to January to now, we have witnessed this heat up in a massive way. And until this kind of cools off and until we start to see things slow down around the tariff discussions, the facts are, the market might not bounce back until these tariff discussions cool off. One thing that I have been noticing, though, is we are starting to see a few discussions happening around cooling off tariffs. Like, for an example, here we have Canada proposes tariff removal if US agrees. We'll see what happens here. But, this is a very good update, because if we do start to see, major updates like this around the tariffs, then yeah, markets will start to, bounce back or at least stabilize a little bit before relief rallying, which is very beneficial. But again, we still need to have the tariff discussions cool off around all of these countries. And it's very hard to, put that into perspective on how long it could take, because this is a global initiative. So we have to watch, wait, and see what happens. But I am prepared for more volatility and for a little bit more price action to be negative. I'm mainly looking at the bounces, right? Because I've been starting to really analyze the overall price action, more so on the year, right? But the monthly is a little bit more of a clearer view. The main reason why I've been analyzing the price action, just looking at the chart here on CoinMarketCap, because we don't even need to open TradingView to see this, I'm looking at higher lows here, right? And so far, if we look at all of this price action, even with today's volatility going all the way back to the 28th, we are maintaining support right around $82,000, which is very good on Bitcoin. I would love for this to hold the same exact way that I would love for $2 to hold on XRP. We still need to see a little bit more price action and a little bit more price data before we officially confirm that, yeah, this is going to hold and everything's going to be all good. The main thing that I'm also looking at when it comes to Bitcoin and XRP, and we could actually look at this on the 1 year on both of these, is that I mainly want to see the previous highs being broken. Now on Bitcoin, it's a little bit significant because we want to actually break over $100,000 on Bitcoin, which is, a significant amount of money to move. It's over $17,000. But on XRP, I mainly want to see us break over $2.60. And again, that's about almost 60 cents. It's like 55 cents from here. But the reason why I want to see this is because it would allow us to confirm that the trend has been broken to the upside and that we are now back in an upward, path to potentially retesting the previous highs. This would also show us that structure is pretty bullish because we are not only clearing, higher lows, but we are also clearing higher highs. And until we actually see that, I'm pretty neutral on this market right now. I still think that we are in a bull market. We are just in a bearish price action. Well, it's basically a bearish price correction of the market, essentially. So, price action is pretty bearish. Sentiment's pretty bearish, but I still think that we are in a bull market. So with that being said, best way to prepare is just have some stable coins on the sidelines. Wait for a trend to be formed here. I would like for XRP to reclaim $2.40 initially before we even talk about $2.60. On Bitcoin, I just want to see us clear the previous highs, like about 89K. Then we really kind of target $100,000. We still have to flip the overall support zone that we were ranging on back in like January and December, which is right around like $93,000, $94,000. But until then, things are still going to be pretty neutral. No major change. Definitely keep a close eye on the major financial events that are upcoming as well, because these definitely will affect the market, especially, Jerome Powell talking on Friday, which I think Friday is going to be a very big day to really kind of show us what path we are on around the U.S. economy, which definitely does affect the global economy as well. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, so notifications on for more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.